TGIF, and this is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Good morning. We start off with the global oil market update. Prices edged up this morning, but we're still down more than 8% for the week as a new wave of COVID-19 infections across Europe spurred fresh lockdowns and dampened hopes that an anticipated recovery in fuel demand would come soon. Prices plunged 7% on Thursday, falling for a fifth day in a row amid concerns about slowing vaccination programs in Europe. Even though infections have plummeted in the United States, the worst-hit country and biggest crude consumer. U.S. crude was up 10 cents at $60.10 a barrel. Brent crude was up 18 cents at $63.46 a barrel. Several large European countries have reimposed lockdowns as new infections increase, while vaccination programs have slowed because of the concerns about side effects of the AstraZeneca vaccine, which has been widely distributed in Europe. Germany and France and other countries have since announced the resumption of inoculations after regulators declared AstraZeneca vaccine safe, but the program halt has made it harder to overcome resistance to vaccines among some of the population. Rising COVID-19 cases, particularly in Brazil, also weighed on the demand outlook, and a stronger U.S. dollar pressured oil prices.
And back here, ensuring that young people have adequate knowledge about a saving culture will help in building a better financial future. That's coming from a team of experts at an online engagement session organized by the Junior Achievement Nigeria. The executive director of JAN, Folusho Badamosi, says the organization is adding digital literacy to its numerous programs to assist persons plan for that future.
And why the first 1 million students is whether it's no small feat.
This is a stakeholders engagement for Junior Achievement Nigeria, and in the spirit of the times, it's holding online.
They coordinate with all the bank representatives.
The session attracts a panel drawn from the banking, insurance, and technology sectors, with the executive director of JAN taking the lead.
One huge thing that we focus on at Junior Achievement is really problem solving, right? At the end of the day. So for you to be an entrepreneur, you have to be able to solve problems. And that's why our company program is such an amazing program that everybody just loves so much, because what the youth do is that they actually solve problems. Now, solving problems is one thing. Using technology to solve the problems is another thing.
The focus of deliberations is financial literacy for young people, and experts present share their thoughts.
Company of the Year program that we participating, I mean, we do participate in a number of the other initiatives as well, teaching them that at a very early age, ensuring that within the structure of the company that they put together and how they structure themselves to have their CFO, to have their business plan, they're able to multiply wealth. Now, those are the sorts of outcomes that we want, and that's a particular program we're excited about.
So it's important that people are taught how to save very early in the day and how to save for retirement. And we always say that you start saving for retirement from the day you get a job. People don't think about retirement when you are 50 or 60. Start thinking about retirement when you are 25.
And for those who have passed through JAN boot camps where financial literacy and entrepreneurship is taught, there is a testimony of great success.
The core of the program was, here's how a company works. This is how it's structured. This is how you finance it. This is what you do with the money. This is how you account for it. And in learning through those steps, which have now become habit for me, I think we've backed about 45 companies in my current fund. I've probably advised and worked for, close to 100 companies at this point in my career.
JAN is part of Junior Achievement Worldwide, one of the world's oldest and largest non-profit economic education organization operating in 120 countries.
And still talking financials, the Nigeria Interbank Settlement System, PLC NIPS, this week launched the new quick response known as NQR Payment Solution Code, an innovative payment platform implemented on behalf of all financial service providers. The new quick response code solution offers a robust platform that delivers instant value for P2B and P2P transactions by simply scanning to pay. Well, Bekeloluwa Nubi, Head Product Management at NIBS, joins us now. Thank you very much for joining us, Mr. Nubi.
Thank you for having us. Good morning.
Good morning. So tell us more about your new product that you recently launched, the NQR code.
Okay. A QR code is a bear-like code image, something like what you see in my background that typically marks data. And the data is usually merchant payment information. So our NQR is a platform that enables merchants and payers to make and receive payments in a fast and secure manner.
Okay, Mr. Nubi, what inspired this product?
The need to innovate to solve about 4 problems that we identified in Nigeria. Number 1, to drive financial inclusion among the bottom of the pyramid segment of the economy. Number 2, to drive down the cost of accessing digital financial services in Nigeria. Number 3, to drive micro payments among merchants, the very low-end merchants. And then, of course, it was part of our response to the COVID-19. Since you understand how NQR works, it's a contactless solution. So payers do not need to touch any physical touch point when they are authorizing their transactions. They just scan the image and they are able to pay without touching any physical touch point.
Now, are there transactions limit for this product?
Transaction value limits are limits that are set by financial institutions. So the transaction limits on NQR are set by respective banks that are on the platform. So yes, there could be limits, but these are set by the banks on the platform.
So what security measures have you taken to ensure that the platform is safe? Because I've heard of instances where the QR codes are exchanged for something else by hackers. You know, what kind of measures do you have in place?
Okay, we have a number of measures that are put in place to secure NQR. The first one being that the NQR is securely embedded into the security infrastructure of the issuing and the acquiring bank. So the bank implements it and puts it in their mobile banking app. So it inherits all the security that is embedded therein. Number 2, we have built NQR securely around the EMV-CO standard and the global ISO standards. And then number 3, the security that the payer uses to authorize his transactions, his PIN, is also part of the security. And the security that is also placed on his phone is part of the security. Of course, there are also an encryption algorithm that is built around NQR such that the exchange of data is between the payer and his bank. And remember also, when the payer is imputing his authentication parameters, he's doing it on his phone, not on any third-party platform, and that is also a form of security. So it makes the NQR platform actually very secure.
So how does this help with reducing costs of providing financial services to customers and, of course, the industry?
Number 1, the NQR, what we have done with the NQR is to make it very cheap. Today, it is the cheapest payment alternative in the country today. And the fact that it is easy to onboard by merchants and also by payers. In fact, for payers, I like to say on a lighter note that no action required. Just launch your bank mobile app and you find NQR out there. So it becomes very easy. Today, vendors can make use of NQR. Vendors that sell newspapers as low as 250 naira because the transaction fees are very little, as low as 50 kobo.
Interesting. Well, I remember you had a similar product, M-Cash. What is the difference between this and M-Cash?
Okay. NQR, like M-Cash, is a targeted solution designed, like I said earlier, to drive financial inclusion and also micropayments. Now, NQR also has a USSD feature that can assist payers who do not have a smartphone. So we've tried not to make it an elitist solution. So payers that do not have a smartphone can use the USSD feature of NQR to drive their payments. and we know that a lot of people are at the bottom of the pyramid. What we are trying to achieve is not to leave out anybody on the merchant side and on the payment side. So people that do not have smartphones can use the USSD feature of NQR and still consummate their payments in a secure and simple manner.
All right. Nigeria's GDP is approximately 155 trillion naira, and its money supply is about 35 trillion naira. That means the velocity of circulation of money is 3 times. In economics, typically, the velocity of circulation increases is followed by higher inflation and transaction flows. Now, the risks that follow an improvement in the payment system like this, and of course financial inclusion, is that the inflation trajectory will increase with attendant consequences. You are aware that headline inflation is now at an astronomical level of 17.33%. What needs to be done to moderate the inflationary impact of these new initiatives, which are worthwhile but could have unintended consequences?
Thank you for that question. Number one, like I said earlier, part of the things that we've tried to do is to drive micropayments. In doing that, let me digress to say that part of the vision of NEED is to ensure that financial services come at a very affordable price, almost at zero if possible. Today, we are the only institution that has that instant payment platform that is as low as it gets. So I do not think that this NQR is going to grow inflation, no. Rather, it's going to bring it down because merchants that up till today we are doing transactions in cash will be able to embrace this because it is affordable, because it is easy to use, because it is simple, because there's no infrastructure requirements for merchants and for payers. It's the existing, for merchants, all they need to do is to display the NQR. It can be paper-based, they can display it on their phone, something like what I'm holding here. So if you came to me, I'm a pepper seller, and you wanted to buy something, you just display your NQR, I just display the NQR, you scan it, and you pay. So I do not think that NQR is going to drive up inflation. No, it's going to actually drive it down.
So,
and reduce the cash circulation.
Okay. So what is the long-term vision for this product? Are we looking to replace the POS system?
No, that is not our vision. Our vision is not to replace any existing electronic payment, but to complement. So there will be people who always carry cards. There will be people who always want to use USSD. There will be people who always want to do transfer on our NIP, instant NIP platform. Did I also mention that NQR delivers instant value to merchants today, not T+1? But to speak specifically to your question, our vision is to position NQR as a platform that financial services providers can layer other value-added services on. If you know, you are aware today that in Nigeria, there's a lot of fintech innovation around financial services going on at all quarters. That is on the one hand. On the other hand, we envision that NQR acceptance will spread to other countries in the world, all other countries in the world, such that wherever you are, anywhere in the world, you can use NQR to consummate your transactions without having to resort to cash and things like that. Also, our vision for the future for NQR is to make it top of the mind payment option, so that whenever you think of payment, you just think of NQR, especially because you can consummate your payment in 3 simple steps: launch, scan, and pay.
Thank you very much, Mr. Nubi, for sharing your time with us this morning. Thank you. We do appreciate it. Bekele Oluwa Nubi is the head product management at NIPS. Well, that product was launched this week. Let's watch that event.
It's a hybrid event with key players in the financial sector present physically and virtually for the launch of a new payment system designed for consistent user experience and accelerated digital adoption. Shoppers will scan a quick response code generated by a seller to pay for an item. Each code will have unique details containing information relating to the transaction and will link with a customer's banking app already enabled on their smartphone.
For financial institutions?
Financial institutions are embracing this fintech innovation. They believe it will unlock a wealth of extra benefits and transform the way Nigerians choose to pay for goods and services. Central Bank's Deputy Governor in charge of financial system stability, Aisha Ahmed, launches the new payment platform.
The NQR payment solution, coming soon after the QR code framework, will bridge an important gap within Nigeria's fast-evolving payments landscape. It unifies QR code schemes across the country, offers a robust payment platform that delivers instant value for P2P and P2P transactions, offers flexible payment options for customers, and a much improved customer experience.
The management of NIBS are confident of the new innovation.
Very, very safe, efficient, and then you have to authorize it. You have to authorize with a PIN. There are other methodology of authorization which will be unveiled, but certainly banks will guide people across as they onboard themselves. This is a homegrown solution, and use cases within Nigeria was actually factored in. One of the end states for us is how we can use NQR to improve financial inclusion.
If you go to a particular merchant today, irrespective of the bank, you can just easily just scan and pay. It is built on the EMVCO standard, which means that it drives acceptability and interoperability across the system.
The digital payment landscape has evolved over the years, and now with a well-domesticated payment system, Nigeria now has a simple and effective payment platform as it drives towards a truly contactless and a cashless society.
And the Debt Management Office has listed its third sovereign Sukuk bond on the Nigerian Stock Exchange and FMDQ Securities Exchange. A statement from the DMO says the 162.55 billion naira 7-year tenor debt instrument, which carries an 11.2% interest rate per annum, was oversubscribed by 446% to the tune of 669.124 billion naira. Proceeds of the Sukuk bond will be used to finance 44 economic road projects across the 6 geopolitical zones in the country. So far, the debt office has raised a total of 362.57 billion naira, less than 3 years through Sukuk issuance for the rehabilitation and construction of major economic roads across the country. The DMO commenced the issuance of sovereign Sukuk in September 2017 as one of the ways to bridge Nigeria's infrastructure gap and promote economic growth.
And the president is demanding a periodic performance report from the Minister of Health for the Global Fund's $890 million support to Nigeria to combat HIV, AIDS, tuberculosis, and malaria. The support is expected to run for the next 3 years, terminating in 2023. President Muhammadu Buhari, who was speaking at the launch of the fund in the State House, asked the health minister to set up an accountability mechanism to ensure that the fund is not abused.
President Muhammadu Buhari is accelerating moves to put an end to the prevalence of HIV and AIDS, tuberculosis and malaria in the country. Acknowledging a generous contribution of $890 million health grant from the Global Fund during a virtual launch at the State House, President Buhari immediately orders transparent management of the fund to tackle these deadly diseases between 2021 to 2023.
Let me also emphasize here that this administration has zero tolerance for corruption and inefficient use of resources. In this regard, I hereby direct the Minister of Health to set up an accountability framework to monitor the use of this fund and provide periodic performance report to my office.
In January 2021, Nigeria equally contributed $12 million towards the Global Fund to crystallize commitment and advance investments in the nation's health sector.
It is my wish that in the next 3 years, these 3 diseases are taken much further down the path of elimination.
Nigeria has so far signed 8 grants towards the tripartite issues of HIV, tuberculosis, and malaria.
2 of the grants are for HIV management and amount to 310 United States dollars to be administered by 2 principal recipients: the National Agency for the Control of AIDS, NACA, and the Family Health International. 180 million United States dollars of the 310 million was earmarked for procurement of antiretroviral medicines, which would maintain 1.4 million Nigerians living with HIV on life-saving antiretroviral treatment.
We are rapidly closing the gap to reach epidemic control by 2022 for HIV. After we succeed in controlling this disease, we'll be counting on the national alignment and the community-led monitoring to ensure the sustainability of the HIV program in Nigeria.
The President is assuring the donor agencies and development partners that the funds will be judicially utilized as the federal government commits to attaining the Sustainable Development Goals by 2030.
Well, the recent announcement by the federal government approving the release of $1.5 billion for the rehabilitation of the Port Harcourt refinery has continued to generate reactions. Analysts at Chapel Hill Dunham have their views and will share with us after the break. Do stay with us. Timi Presievia said that the contract awarded to an Italian company will be carried out in 3 phases. According to him, the funding already in place is drawn from 3 components: the NNPC internally generated revenue, budgetary allocation provisions, as well as Afrexim Bank. Well, Mustafa Wahab, oil and gas analyst at Chapel Hill Dunham, joins us now. Good morning, Mustafa. Thank you very much for joining us.
Thank you for having me. I'm happy to be with you this morning.
You're welcome. So what are the major takeaways for you from the new FG's approval of $1.5 billion for Port Harcourt refinery rehabilitation? Should we be excited about this?
Thank you so much for the question. There's a lot to unpack from this, actually. So number one is that what is becoming, a general knowledge is that Nigeria's government now sort of appear to be addicted to importation of PMS products, and I do not think that this sort of addiction can be beaten, right? So we have a combined refinery capacity of over 445,000 barrels a day, and yet in the last 10 years, what we've seen is that those combined capacity has barely reached 15% utilization rate. In fact, since January last year, these refineries have been moribund, despite this massive amount of dollars that they've spent on their turnaround maintenance. So personally, I think I see these refineries as another white elephant project in Nigeria that may never come back to life. Just so I put it in a better perspective, Port Harcourt refinery alone it's around 125,000 barrels a day plant capacity and was shut down last year, January, just basically to, complete appraisal of the refinery for, total revamp, right? What we saw was that, FGN basically set a target of around, 2023, to bring it back to life, to, run at around 90% capacity utilization rate, which is more or less a pipe dream as far as we are concerned. Just so I backpedal a little bit, it's not necessarily a pipe dream, really, to revamp the facilities, since the plant is only 40 years old, right? And we've seen, older, plants globally that are actually running, quite strongly today. But I think the real problem is that from our estimate in-house in Chapel Hill, we think that restructuring Port Harcourt refinery alone, to a cleaner fuel levels as that of Dangote refinery would cost nothing less than $1.7 billion, That's even aside, any additional costs, for repair. Now, in the grand scheme of things, the 1.5 billion approved by the FGN isn't really too far from our estimate. But the key question is, who is going to finance this sort of investment? And obviously, what's going to be the investment case, especially with the potential competition from Dangote coming, in 2023. What we know right now is that, FGN has actually laid out, 4 key funding sources. They stated that NNPC, IGR, budget allocation, as well as a partnership from Afrexim Bank to basically fund this sort of project. But the structure is yet to be disclosed. And secondly, the key problem we have in-house is that why are we still talking about revamping refinery when the globe is already shifting to greener and cleaner energy, right? You go to Norway, for instance, which is a country that basically relies on oil and gas revenue, as with Nigeria. They basically stated that by 2025 they want to end the sale of fossil fuel powered cars in the country. Beyond Norway, 9 other countries have also potentially stated that they would ban any internal combustion engine between now and the next 10 years. So even if we play a devil's advocate and assume that the refinery comes back to life, the question becomes, for how long, and will it be relevant in the grand scheme of things? I think that FGN would have to reprioritize or re-strategize to basically focus on more projects that have stronger investment case.
$25 billion has been spent on turnaround maintenance of refineries in the past 25 years. So would you advocate for rehabilitation or build a new one?
Thank you so much. Really, this sad story about refinery in Nigeria is the fact that just 3 years ago, we saw the Nigerian government basically sorting external financing to revamp the domestic refinery. And that's basically due to collapse in oil prices and obviously shortage in availability of FX for PMS importation. What we saw was that sort of effort eventually hit a dead end, since the government was not able to convince any reasonable investor of the viability of that sort of venture, right? I suspect that's the reason why a Dangote, for instance, would rather invest in greenfield project rather than acquiring a new one. The truth is that nobody really knows how bad things are in those plants. They are probably already corroding, which makes any attempt to revamp those refinery a very difficult task. So I think that it would be a lot more sane for the government to argue, or convince investors, to invest in a newer refinery than revamping, the old one. So in-house, we think that, it will be a lot more sensible for them to start to talk about raising funds, to build a new refinery rather than, wasting this lump sum of $1.5 billion into revamping the old refineries.
Now, as an alternative, the government has been talking about modular refineries. What happens to those ones? Should that be really an alternative?
Yeah, it should be an alternative, but the key problem with modular is that, in Nigeria alone today, we consume up to 17 billion liters of PMS products, in a year, right? So the key question is, could modular refinery alone supply this sort of massive amount of demand? The question is probably no. So I think what FGN is trying to do is that, to substitute for this massive amount of effect that we push towards importation of PMS products, does basically make sense, to refine those products in-house in the country. But the problem with modular refineries is that they don't have enough capacity to supply, domestic demand. That's why, you need an alternative source.
All right, $1.5 million is $1 billion, is a big number. What impact do you think this will have on Nigeria's revenue and debt servicing at this moment?
For revenues, for debt service, really, the last time we checked, debt service, revenue is now, hitting the ceilings of, 70 to 75%. What that then means is that for every $1 Nigerian government earns in terms of FX earnings, 75 cents basically goes to debt servicing. So that basically means that the country is already broke, right? So if you want to, invest in this sort of venture, it then means that you would have to, start to rack up more debt or more borrowing. So the key question is that, do we have enough room to continue to rack up more borrowing? I think the answer is not, right? So on revenues, things are already tight. I mean, the good thing is that we've starting to see, oil price now flexing with the $70 per barrel levels, which basically makes a lot of sense, for oil revenues. But on the other leg, Nigeria's budget deficit still top, the 5.5 to 6 trillion, levels, right? So it just basically means that, to at least see any reasonable budget implementation this year, we would have to, borrow more. And I don't think personally that we have enough room or enough appetite to continue to rack up, borrowings in the country.
Now, as an analyst in the oil and gas sector, how committed do you think Nigeria's government is in the process of deregulating the downstream sector?
So fantastic. I mean, I already mentioned it earlier that debt service to revenue ratio is close to 70% for Nigeria today. It just means that, we should not even be talking about the question of subsidizing, PMS right now, because, there's no funding, to meet those sort of venture, right? So the key question becomes, does the government have, the appetite, the room to eventually liberalize the downstream sector in the country? The answer is probably not, right? I mean, the stories, you've seen the numbers. Inflation, for instance, is at 17% levels. Unemployment rate is close to, is more than 33%, right? But beyond that, we've also seen GDP for full year 2021 being negative. It just means that there's a lot of structural problems in the country that would ensure that the government will sort of remain apprehensive towards leaving the downstream sector to market forces to determine, right? So what we think is that is most likely for us to continue to see subsidy payments in the country between now and the nearest future. So what we did in-house in Chapel is that we estimated that the government could potentially spend at least more than ₦1 trillion in subsidy payment between now and the end of 2021 should oil price remain at $60 per barrel levels and exchange rate of around 401 naira to a dollar. So the question is, where is this money going to be coming from? Because as of the budget for 2021 budget, we don't think that, I mean, we've not seen any under recovery or any subsidy that is being budgeted for. So what that then means is that we'll probably start to see FGN funding that sort of subsidy from any surpluses that is coming from NNPC operation for full year 2021.
Okay, so what's your outlook for global oil prices and what does it mean for PMS price in Nigeria?
In terms of oil price for us in-house in Chapel Hill, what we think is that global oil demand this year is going to struggle to meet the 2019 levels. And that's basically because of the fact that vaccination campaign is still moving at a slow pace globally. It then means that government generally would continue to restrict movement and any economic activity, which just basically means that demand for petroleum products would remain largely muted. But for us is that we think the extent of supply cuts by OPEC and its allies would basically determine the direction of crude oil prices this year. And so if OPEC and its ally maintain current production cuts, we think that it is possible for supply to basically run below demand. What that means is that the impact of that will basically put some sort of a floor on oil prices going forward. In Chapel Hill, we're expecting oil price to average between $60 to $65 per barrel. If you take that into pricing template for the PPPRA, what you see is that at $65 per barrel level and 401 exchange rate for exchange rate, what we think is that pump price should trade nothing less than 222 naira versus current selling price of 168 naira per liter. What that then means is that we'll start to see FGM basically subsidizing close to 55 naira per liter for the Nigerian citizen going forward if they decide to leave price at current level.
All right, Mr. Wahab, before we let you go, what impact do you see oil prices will have on earnings of upstream and downstream listed?
Thank you very much. I mean, for upstream players, I mean, the only listed exposure that we have is currently Seplat. And as at full year 2020, we've seen Seplat reporting around $85 million in loss. And that's basically due to the collapse in oil price that affected revenues. But beyond that, because of the material decline in oil price, we also saw, Seplat reporting close to $164 million in impairment charges. For us in 2021, I mean, oil price is already flirting with $65 to $70 per barrel level. What we think is that two key things will drive Seplat to profitability this year. Number one is, significant, the recovery in oil price that we've seen. We think that would have, significant positive impact on, revenues for the company and also on cash flow generation. But beyond that, we also think that there is strong likelihood that those massive impairment charges that Seplat reported last year will probably be reversed this year, and the impact of that would obviously support, bottom line. For downstream players, I mean, the narrative is still going to be the same. Right now, margin is significantly squeezed, and that's basically because of the fact that NNPC remains, the major importer of PMS products in the country. We checked, we attended Aridova's, conference call recently, and what we saw was that, margin is still quite tight and squeezed. So what we saw was that the company is basically, trying to, protect margin by, pushing a lot of, loops products where, margin is at the highest, right? So what we think would be the key game changer for downstream player is probably the passage of the PIB, which will basically allow, producers or oil marketers to basically, import their own products, source their own FS, and obviously charge, any prices that they feel comfortable with. That's basically what we think will happen for the downstream players.
All right, thank you very much, Mustafa Wahab, oil and gas analyst with Chapel Hill, Durham. We appreciate your time.
Thank you.
All right, let's look at the market with Eddie there. Good morning, Eddie. Well, the banks are still driving the positive sentiment there. GT Bank released its results yesterday.
Good morning, Timmy. You're right. So the banking sector jumped up by about 4% yesterday, actually. GT Bank released impressive earnings. So you know what they say about separating the men from the boys? That's what we're seeing now in the banking sector. And investors took advantage of that and started positioning themselves in Access Bank, FBN Holdings, also hoping that maybe when their results come out, they'll be impressive as well, and they'll be able to partake of any goodies that the lenders will be releasing.
Okay, let's hope that this is sustained at least for a while into next week.
We also saw earnings released this morning from Union Bank. It saw higher profit after tax, although we saw some declines here and there, but then it wasn't all bad totally. But to talk more about the earnings is Mohammed Jamiu, the head of securities dealing at APT Securities and Funds. Good morning, Mr. Jamiu. Thank you for joining us on the program.
Morning.
So we've seen earnings from GT Bank and now Union Bank. What stood out for you the most with in those numbers, and how do you think that would shape trading for the rest of the day or the week?
Yes, what can get from the earnings of both banks is what I've always been saying, that the 2020 earnings or results is likely going to replicate what we have in 2019, despite the coronavirus pandemic that we encountered in the fourth quarter, towards the last lap of the fourth quarter of 2020. So if you look at those earnings, you will see, in the case of UBN, you see that their gross earnings remain flat, though the earnings is being pressured by higher operating expenses, which grow by 11% and make the PAT to be down by 6% in 2020 results. And the same goes to DCB. Though DCB has a gross earnings grow by 4.6%, and also interest income came down by 1.2%, while the PAT grew by 2%. So what this result is showing us is that they replicate what they had in 2019. And that is why we look at the results and the dividends being declared by these two companies, they also replicated what they did in 2019. In 2019, Union Bank declared dividend of 25 kobo, and also the same thing in 2020. The same goes with the GTB, paid 2.70 kobo as final dividend, and also do the same thing in 2020.
All right, Mr. Jamiu, thank you for your input on the program. We hope that the rest of the earnings we see will be as positive as that of GT Bank. Do enjoy the rest of the day. Muhammad Jamiu is the head of securities dean at APT Securities and Funds. And very quickly, just to look through those numbers, the All-Share Index jumped 0.54% yesterday. We saw higher turnover of volume and value. Unity Bank contributed about 1 billion naira to the units traded yesterday, while GT Bank accounted for a chunk of the value traded yesterday. Hopefully, we'll see the banks or investors react positively to those numbers. And, hopefully this goes into next week and changes some of the sentiments we're seeing in the market, Chimi.
Let's hope that happens eventually with the 2 days of positive trading that we have seen. I don't know how much difference that will make for the weekly close, but let's just hope that in the coming week we're going to see some positive impact of some of these earnings coming in. And of course, don't forget, the MPC meeting is next week, Tuesday. Monday and Tuesday, precisely. Okay, we'll take a break, and when we come back, we'll do a crossover to London. All right, let's bring in Juliana now for a quick update from the street of London. Good morning, Juliana. Thank you very much for coming on board. Well, it's the morning after the BOE MPC's decision to to keep interest rates at a record low of 0.1%, and of course, the quantitative easing. What's the opening calls at the markets looking like this Friday morning?
Good morning, Chimase. Well, the FTSE is opened up in red. Nothing to do with the Bank of England's unchanged fiscal policy status. As you said, interest rates remain at 0.1%, and the quantitative easing programme is at £895 billion. That was a unanimous vote by the 9-strong MPC committee. They're expected to meet again on the 6th of May. And Andrew Bailey did say that even though we are, anticipating a strong rebound, the outlook does remain unusually uncertain. One of the reasons why the FTSE is in the red is because we've had public borrowing data released early this morning showing that in the month of February, the British government borrowed £19 billion last month. It goes without saying that this is the highest February borrowing on record, a little bit lower than what some economists had projected of £21 billion, but it still begs the question as when this money is going to be paid back and put back in the coffers.
All right, and the bank has become less gloomy about unemployment amid signs that budget measures and a more resilient than expected economy will improve the UK's jobs outlook. Is that the same sentiment shared by economic analysts there?
Yeah, absolutely. I think there are always going to be fears about unemployment because we know that these temporary schemes that the government have got in place are going to be coming to an end any time from now. But, the outlook from this time last year isn't as bad as what some had forecast. So unemployment currently stands at about 6.1%. Of course, we're looking in the rearview mirror. The Bank of England can actually see exactly what's happening in real time. So there are some concerns, but I think yesterday the Bank of England pretty much painted a bright picture. They're expecting, as soon as these restrictions are lifted even further, for Brits to go on a serious spending spree, trying to book summer holidays and, go for dinners outside with friends once again.
And British Airways has joined the rush to expand remote working. Another example of big firms offering flexible employment. Have they laid out plans to achieve this?
Yeah, not much plans, but they've certainly let their staff know that that is a method that they'll be looking to achieve. Hybrid working become really popular in the pandemic, literally because people couldn't go out to work. So many big corporate organisations have had their staff working from home. I believe with BA, it's more about saving money. They've already cut 10,000 jobs because they've been adversely affected because of the lockdown over the past 12 months. And this story all pertains to their headquarter, the Waterside building that they've got, massive building next to Heathrow Airport. They're expected to sell that, and I believe 2,000 staff are in that building. So there will be some sort of hybrid method, and this is what we've seen from all the tech giants as well as some of the banks, as in keeping some staff in the office, but then some staff working at home.
Okay, Juliana, we'll look out for more update from you later in the day. Now let's look at the crypto market. Well, Ladi, Bitcoin struggling to stay around 60K.
Yeah, it's the 60K region has proven quite difficult to go above. It's trading about $58,000 this morning. But Bitcoin, you can't predict it. It could break 60K anytime from now or could still stay below it. But we'll keep tracking that. The market cap of $1.79 trillion, down by 1.16%, 24-hour volume $130.83 billion, down 6.91%. Bitcoin dominance 60.78, down just 0.06%. So the altcoins still have some room to play. Price of Bitcoin as at 8 a.m. this morning, $58,301. Now trading about 58.7 at this moment. It was down 1.35%. 24-hour volume $56.458 billion. Ethereum, $1,801, down 1.78%. Ethereum not doing bad at all. Top alts by market cap, BNB down 265 down 3%. ADA, Cardano, this one has had a massive run, down about 12%. Sure, it's profit-taking at this point. Polkadot down 1.11%, $36. XRP still have that SEC issue, down about 0.88%, but it's actually one to watch at this point. Top 5 gainers, Pundi X back up at 47.54% this morning. Pundi, amazing run, was about 0.000 a few months ago. Harmony won 44.38%, up 11 cents. And Sia Coin, one of the OGs in crypto space, about 0.02, 24% up this morning. BitTorrent trading 19.53%. So BitTorrent, PundiX, one of the larger supply coins, doing well. So it's a good thing to actually look at other large supplies because it looks like they are following each other at this point. Luna, $21.33, up 19%. We have ADA there, ADA topping the list of losers, 12% down. I think we have Gaius now. Gaius Chibweze, crypto trader. Do we have Gaius? Hello, Gaius. Okay, looks like we lost Gaius there. I will have a Phil here, FIL, $79, down about 10%. CHSB, $1.37. Hello, do we have Gaius now?
Yes, I'm on the line.
Gaius, great to have you. It's been a while. Good morning.
Yeah. Good morning. How's it going?
It's going good. So I see Bitcoin is finding it difficult to cross 60 and actually stay there. What's happening?
Well, for some time now, after that first move where it got to $61,000 and a pullback, so many factors has been keeping it where it is. First of all, that big hype that we had for some 2 weeks, that pushed it very much. That hype is not there for now. And I think it's also gathering momentum to move to $70,000 and thereabouts. So a lot of persons are selling, hoping for a retracement to 55 again. So I think all these factors are what is
stopping it from crossing 60.
Yes.
Okay, so what's your...
It's going to get the next move now. It's still going to get back to 60 and more.
Okay. So what's your outlook for altcoins?
A couple of them have been doing very, very, very well. Like, I don't know if you know of the Project Bell. Do you know of the Project Bell?
Okay,
Yes. I bought into Bell, and it's been doing very, very well. But all other coins, they look up to the direction Bitcoin is taking before they make a move. So most of them have also been kind of stagnant too, looking at is Bitcoin going to go 60 and above, or is it going to drop? So, the move, any move Bitcoin takes affects how other altcoins will go too. So I think the indecision of Bitcoin is what is holding most of them. But the market is good, very, very healthy.
Okay, quite healthy. All right. Thank you, Gaius. Always great to have you, and do enjoy your weekend. Thank God it's Friday.
Absolutely. Thank God it's Friday.
Yes,
and of course, getting into the weekend, anything can happen with the Bitcoin. He talked about the coin hitting 70K. That would be a miracle, And then this week you talked about ZRX, wondering how it's doing now.
Yeah,
and of course, Gaius talked about Bell. Perhaps these are the altcoins we should be looking at this weekend?
Exactly. but it's not financial advice, remember.
I take that.
Very volatile market, so, at your own risk.
That's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.